Hello, good morning, and welcome. How's everybody doing today? Hope you're doing great. Fantastic, even. It is November 9th. We are one day before the CPI release, and market activity has been fun, to say the least. So, where are we at today? Well, I guess some of the most obvious things that we should probably discuss is that over the last couple days, we have had higher lows and higher highs. We've also challenged and overtaken our 20 moving average and our 50 moving average. As well, we've come back up to the point right where FOMC balanced before dropping us down. So, lots of interesting developments from FOMC to the aftermath, right? So, what we can kind of draw from this is that the FOMC reaction was an overreaction, at least for right now, for the short term. Um, this could potentially be due to people waiting for the CPI report to see if it matches with a lot of what they were saying at FOMC, or it could, of course, also be people waiting for the midterm elections to, see what happens in the U.S. politics. But that being said, yeah, so it was an overreaction, and since then we've reclaimed that all over the course of 4 days. So now we're sitting on day 5, right before our CPI report, and we're gonna pop over to our report look so we can take a peek at some of those things. On our weekly, granted we're only 2 days in, but we do seem to be getting some coiling of price action, narrower ranges from the top to the bottom. So potentially, we've got some energy building here for a move up into the weekly moving averages to challenge those, or for the next breakdown and attempt at our low, or at the very least, this support level down here at 362.17. Time will tell with that. On our daily look, one of the big things that I want to point out here is yesterday's high, right where we kind of met our FOMC drop, also lined up perfectly with one of our big volume nodes in our 3-month look. So, what does that tell us? Well, we had a really big amount of supply step in there, sellers pushing us down. However, we did also find a really big demand wall down here. We have discussed before how the high volume nodes can oftentimes be where new auctions begin, old auctions die, similar to our low volume areas. So, for all intents and purposes, since our price action didn't get pinned there, that does give us some suspicion that potentially we are going to find more supply stepping into the market, and there may be some fear-driven activity in the near future. Obviously, we won't know for sure till it happens. But with that in mind, we are still looking at our 50 moving average, our 20 moving average. They're absolutely in play. We've got this kind of swinging going along them. They're coming closer together. So we're also potentially looking at a crossover event in the near future. So if we don't end up completely breaking down and losing all this progress that's been made, we could be seeing a crossover in the moving averages in the not so distant future, which definitely would be a good sign for some bullish activity on the horizon. Yeah. Let's see. We got another minute before everything opens up. Okay, what else can we look at here? Oh, this was also something interesting that I pointed out in the morning report. So our put call ratio peaked at 1.34 yesterday. That's insanity. I mean, you can see how far above our bearish line that is. We don't normally get a put call ratio up that high. So very, very bearish sentiment yesterday. And you can see our close only closed out at about 1.29. So there's still a lot of shorts going into today that did not close yesterday. So what this tells us is we should be making sure that we are monitoring pretty much anything that's going to happen below our halfback, right? If price action and activity can get above the halfback and stay above it, that puts a lot of pressure on those shorts that are opened up. If we stay below the halfback, not so much pressure, right? I mean, we've got a supply zone up above, we've got a demand zone down below on our 30-minute, and we've got some larger zones a little bit further away. So we'll see if we get some balancing, condensing price action in this area today, right along our 50 moving average, or we'll see if we end up losing the previous day low or high and the market starts trying to make a move leading up into the CPI report. All right. So we got about 30 seconds. We're going to get back to our normal view. Yep, there we go. All right, good. We got our correct chat windows open. We can see everybody. You guys can see everything. You can hear me. All right, now I'm going to move over to my main chart. Make sure we have the correct contracts loaded up just in case we decide to make any early trades today. I don't think we're going to be making any early trades. There really isn't anything that's telling me I should be trying to jump into a position. We do need to adjust our overnight low, though. That did get a little bit lower while we were chatting. Yes, by about 30 cents or so. So overnight low is the first thing we're going to be paying close attention to here, especially looking at how everything kind of lines up with our profile chart, right? We've got that thinning area down below, which typically would tell us that we would end an auction there. So for playing this as our extreme today, we definitely want to see price action reject this pretty well and then start moving up through our VWAP. We're not going to jump into a long position here because there's a few other things that would have to happen to make us feel more confident and secure about that as an early play. We're also hanging out below yesterday's value. We're right by the T+2 point of control. There's some things that could kind of hold us here for a bit without giving us a good sense of direction. So we're just going to watch. We're going to hang out and we're going to wait. Patience today, especially with the CPI report tomorrow. I'm expecting some muted activity, choppy activity, and we definitely don't want to try forcing trades. Good morning. Hello. Thanks for joining me. How are you doing today, sir? Got a case of the Wednesdays? Pardon me. Fair enough. We can't all be 100% all the time. That's just unrealistic. All right, I'm going to pop off the overnight activity so that way we get some better representation of our moving averages and our VWAP. All right. Pretty sharp little drop down there. Not a full dollar yet, though. So we did break through the T+3 high, but it seems like maybe found some demand down there. The next spot that we're going to be watching is 378.44. If we start getting some price acceptance below that line, we could be looking at some challenges on our previous day low. So far, And we were just talking about this. We've got the higher the highs, higher lows. So if today started off with a lower low, that would definitely be something significant for us to be paying attention to. I actually don't have any options queued up quite yet. I suppose I could put something on there, but I'm still not really seeing any potential early trades. But you do bring up a good point. Without bringing up a good point, it's probably better to have them loaded up so I'm not scrambling to load them up if I see something happen. All right, so let's see. Given our current activity, VWAP is probably what we'd be looking at in the short term for a change. So that tells me 379, 380 for our longs. It is a contract expiry day, so we'll probably go a little bit more in the money. So I think we're going to look at our 379 for long as opposed to the 380s. Short, well, we were just talking about that 378.44 level. So I think we can probably safely use 378s as our shorts to jump in if all hell breaks loose. All right, so officially we've got 379 on our long side and 378 on our short side queued up. Oh, there's a pop-up into our VWAP. See if that holds as resistance or if we get a little change of tone nice and early in the morning. So if we do maintain this trajectory over VWAP, we retake the overnight low. That's going to be our first good argument for jumping into a long position, because that would indicate to us that price action below the overnight low was not received well. People just weren't having it. They weren't ready for it. They didn't like it. And then conversely, if the overnight low holds as resistance, and that tells us that it doesn't look like people are interested in revisiting our 50 moving average quite yet. All right, got a pretty gnarly downward trajectory slope. That potential demand zone looks like it's getting chomped on real quick. We are going to put a support line down here. See if we've got a Wyckoff channel forming yet, or if we are going to be wedging down towards this point. So strictly from a technical standpoint, we've got a good risk to reward entry long right down here. There really isn't anything on my charts that tells me I want to be getting in long, but we do also discuss how making sure that you pick your entries accordingly makes sense, right? So if there were indicators telling me that I should be getting in long, a situation like this would be perfect for risk to reward, because we would be out if we broke that bottom wick, and we would stay long as we didn't. But as we can see, we did in fact make that new low. So if we were playing long from a potential channel forming there, we definitely would have been getting out there. So now the next long argument we would be looking for would be the spring event. We want to see price action get rejected after it abruptly tries to move below, and we want to see it come back through that support line. So you would actually use that support line as your entry point for a spring event, because then again, right, you get that really good risk to reward location. You can get out really, really quick. You know exactly where you're out. You don't have to hold it super long and whatnot. All right, so we did just touch that point we were talking about, that 378.44. Actually, we touched a little bit below it, but that's the spot where we want to see this aggressively reverse for a long decision. If it doesn't, we're going to be starting to think a little bit more bearish because we're getting awfully close to that previous day low. So if this is a spring event forming, it's kind of an ugly spring event because we're also getting some supply push right at that support line. I guess technically it would be a resistance line now. But the other thing to consider, right? We already talked about how we're expecting it to be pretty choppy and gross this morning. So that's also why we're not just jumping in all willy-nilly. Potentially we'll have something that looks like a good setup, but there may be too much volatility and it might just chop us out of it, you know? So I am setting up a long entry stop in. I may adjust it down a little bit. I was honestly assuming that the 190s would be closer to our moving average line and whatnot. But I don't want to get too close to it that we end up getting executed in before it actually does that. All right, put us in. So our stop out is going to be below that support line now. Definitely not going to let it get that low, but we're just keeping that as a safety stop because, again, this is really choppy right now. Wow. Look at that. That is just moving. Giant wick there. Big push away from VWAP. We're going to let this one run a little bit. Because if this is the flip around, we're in the best spot. I don't like the volatility on the price. I can't really defend this without really running the risk of getting knocked out because we would want to use our VWAP as our line now. Potentially we're looking for the crossover event. Yeah, that right there, that would have booted us out if we were defending this. We are going to take that stop off, though, just because we might add to this. Oh, never mind. That moved a little too quick. Yeah, this is that crazy chop we were talking about. As long as these still look like they're attempting to cross over, yeah, a lot of push and pull. We want to see VWAP hold. I mean, we want to see VWAP hold. We want to see the overnight low break. Because then the overnight low we would expect to act as our support once we break through it. Yeah, you have to wait and then it comes up. All right, potential break there. Well, with that breach, that's a potential upthrust event now. I like that our moving averages are getting closer together, but they still haven't crossed over yet. Okay. They're trying to cross over above VWAP. Jeez. But just look at this supply push up there at the overnight low. They're defending it, which makes sense, right? We were already talking about how the put call ratio had a lot of shorts in positions. So, I mean, it totally makes sense that people are going to be defending some of those pivotal lines. Oh, still hasn't quite crossed over yet. So quite a few of our other chart timeframes are pointing downward. So, I mean, unless this really starts ripping, I think we are going to defend this now. Oh, yeah. Oh, yeah. We're not going to let this one turn into a loss. So, probably should have shaved some profit there on the volatility right when we hit that resistance line. I didn't move quite quick enough, though. So, we're just going to leave it alone. I mean, I like where my current profit target is. You won't be able to see it on your chart, though. It's right up where my stop line is today at 280.36. Kind of meshes well with some of yesterday's activity. But we are definitely running into some resistance at that 61.8. But some of our boxes have been checked, right? We overtook VWAP. We got back over the overnight low. Pretty aggressive move over the overnight low, too. We'll see if the moving averages hold, if we continue to kind of consolidate up here. I mean, either way, if this crumbles, we're not going to lose on our first position of the day. It just stinks because we definitely could have taken some better profit up at those peaks. I mean, we're still far below that halfback, too. And the halfback is really the important line for the shorts. If price action never really gets back above that, they're not going to be feeling as much pressure as they possibly could be. I mean, our put call ratio on the day is also kind of looking neutral, so maybe that was this morning activity was profit taking. Oh, if that's the case, then we definitely should be getting out of our long. Well, we can let our stop execute. Like I said, oh, here we go. Or not? Yeah. Okay. So we didn't lose on the position, but we could have taken about 50 cents on 3 contracts up at the top there. So it's it is what it is. I was playing to a potential further break for a bullish thesis. We'll see if maybe we can get a better position, because that thesis is not out the window yet, right? I mean, we've still got the VWAP, we've still got the overnight low. We did make a new high on the day. uh, Hindsight, of course, I definitely should have taken one piece off up at the 61.8. That was what we would call a technical error. You know, when you're using the threes strategy, your first profit point, I mean, you do have a profit target, but your first profit point, you're always going to initiate on a volatility spike like that. I mean, that was 50 cents worth of volatility. There was no reason to not take a piece there. There's one thing that I find, and one thing you'll find if you ever do decide to use the scaling of threes strategy, by executing out your first piece on volatility, no matter what, you'll end up a winner on lots of trades over a period of time that end up reversing and crossing down. I mean, look at this, right? We're back below VWAP. So had we taken that piece at 50 and then let the other two get stopped out, even at break even, we still took 50 cents. So, but that's pretty much how the scaling of threes works. So your first piece you take off with a volatility spike, or at your profit target, right? Whichever comes first. And then your second piece is your profit target. Or if you end up taking your first piece at your profit target, your second piece you then set up to stop at your profit target. Then you look for a third profit target, and that's where you set the limit for your second piece. And then your third one, you can either set up to be a home run play, where you just kind of figure it at a break even, so that way you took really good profit on your first two pieces, but don't set it up so you can actually lose on the third one. Or you can set yourself up with a fourth profit target. So for raw numbers, this is what I've found. Ideally, you want to base these all off of structure, because that's what's going to make the most sense. Front-running structure for your profit targets. But if you want to look at it strictly from a mathematical perspective, if your first profit target or your first piece sells for 60 cents, that's essentially going to pay for one missed trade. Then you set your second piece to sell for $1.45. At that point, if your first and your second hit, that's going to pay for 5 missed trades. Then if your third piece, that's just icing on the cake. So essentially, by just using those raw numbers, what I want to point out is, by using the rule of threes, or using the threes scaling strategy, if your edge has a 20% hit rate, that strategy pays for itself. So any hit rate above 20% is going to bank you profit. Now, myself, my edge has about a 78 to 85% hit rate. So by using the rule of threes, as long as I don't make emotional errors or flaws that lead me to taking much larger losers than my rules allow for, This should work out just perfect for me. All right, so analysis time. We had that run up, really big ignition candle there, but as we can see, that got consumed almost immediately. And any potential demand zone that was formed right around that VWAP, it didn't exist. It was gone. As we've gotten below VWAP and price has tried to gather some momentum, it's run into demand. In fact, where we had a demand zone from prior that technically no longer exists because we went through it, we do see we had a pushback there. So that's probably more to do with our support that we've got going on down here. All right. Coming back up over our VWAP. Testing our moving averages, seeing if they want to cross back. So seems like our balance thesis so far is going to be the winner today, right? We've got a pretty quick cross back 2 times already from our morning session. So this is the chop. And we've got our extreme edges for A period. We're going to be monitoring once we get into B period and C period to see if we end up losing the high of the day or the low of the day, because that will give us an inkling of who's got a little bit more push today. So if we end up taking out the low of the day, that's going to tell us that sellers are a little bit more aggressive. If we end up taking out the high, that's going to tell us that buyers are a little bit more aggressive. Another thing to note, our daily volume is sitting at about an 82.5% sell ratio right now. So taking that into consideration with the fact that we're still kind of swinging around VWAP, that tells us that there are more active participants selling in the market this morning. But while there may be more active participants selling in the market this morning, they don't seem to be gaining much in terms of price. So the only thing at this point that I could see dropping us lower is if we find an absence of buyers and short covering. Because from what I'm seeing, all we need is a little bit of buying, a little bit of short covering to balance out this selling that we're seeing. Of course, as I say that, we just made a new low on the day. So sellers are showing some muscle today. Oh, would you look at that? So that bigger demand zone I was talking about below us, we just touched that. Nice little push up away from that. I wish I had been paying a little bit more attention. I probably could have queued up a long position there. Nothing else, that would have been a great scalp. Doesn't necessarily mean we're going to be, flipping back again, but lots of trapped orders from yesterday afternoon. Could be some short covering, could be some new buyers. Pretty aggressive downward slope at the moment off of our 61. So by drawing a channel, that touch of our demand zone lined up with a breach of the bottom. And would you look at that? We find ourselves back at that support line that we've already talked about. Definitely something noteworthy on our market profile chart. All of our higher lows have been fairly significantly higher. With the low that we've got on today, I mean, this is very close to our previous day low. Hasn't breached it yet, but it's definitely a much smaller space gap. I guess we can use the word gap. It's technically not a gap in market terms, but um, it is a much smaller price range between yesterday's low and today's low, as opposed to our T plus 2 low and yesterday's low, or our T plus 3 or our T plus 4. We are now starting into our B period. Looks like it's going to see if our low is proper on A. Oh, look at that. That looks like we've got a pretty proper hold on A. I'm thinking about getting into a long position again. I don't want to take it at our support line though. Ideally, I'd love to grab it at 378.49, but we we may have missed that opportunity. Jeez, look at that. Yeah. Right where I wanted to enter to. What a shame. This is the balance chop we were talking about. We've got a really heavy wall of supply crushing down. We've got a really heavy floor of demand pushing up. So we're getting more and more condensed price action, which hopefully means either today or tomorrow we should see a pretty big move in one direction. So as long as we're prepared and ready and we know what signs and signals we're looking for, should be able to make some pretty good money going into Friday this week. This is an interesting spot that we're balancing in, though, because it's kind of like smack dab in the middle of some thinner parts of the profile. Although, I guess that kind of does make sense. Um, so if all of this kind of leads into tomorrow with our point of control right around where our 50 moving average is, then looking at our actually you can kind of see it on the profile chart there. So just imagine you squished all of these together. We do kind of see that bell curve really kind of forming up towards that 50 moving average. That kind of becomes the focal point of all of this activity. So it's fleshing out some of this just to fill in that thin spot of the bell curve. But let's see. I'll be very interested to see here if B period establishes a proper high on A period too. So it established a proper low. And now if we end up stopping, actually probably right about here, that would leave us with a proper high for A period too. So let's see what happens. Wow, look at that. Wicked off right at that spot. Oh, yeah, sure. There's a video that I've got up. I'll drop you a link to that um, later today when I'm done trading. Those monkey bars can definitely be a little bit tough to navigate at first. The default settings are not. It's weird. Monkey bars is TOS's version of market profile, but their default settings are not market profile. You have to really futz with them to get it to look the way I have it. Mm, a little sad that we didn't get that long entry that we were talking about. Price was just moving too fast. It was unfortunate. Oh, all right. So it looks like B period's going to make a new high. Buyers are showing some teeth. Cool. So we had sellers attempt a push down, rejected. We've got buyers attempting a push up. We'll see if they find rejection. 50 moving average is not too far off. That's the next spot that we're going to be keeping our eye on. If we get some similar dying out activity that we got at the last high, we may actually be looking to short this back to VWAP. Just because I'm still not convinced this is going to turn into a one time frame day. I really think this is balance. Although fanning balance. All right, here comes the fitty. So, ironically, this is the spot that we wanted to sell our original long position at. So we were in the right move, just wrong time. And if we had re-entered at that new low, we would have gotten our first and second piece at a full price target. That would have been a really nice day. All right. Well, what's our next play, though? That's what we need to be focused on. What is our next play? Because that play's gone. It's done. The filtered variety of what? You thinking that I'm smoking with cigarettes, doing hood rat things with my friends? Does anybody remember that viral video? I am very much looking forward to the day when I can do one of these streams without coughing. So, good risk to reward location shorting the 50, but given the activity that we're seeing now, little risky. Geez, actually, it seems like today the game would be to just keep drawing channels and go with the break, right? I mean, that's kind of what's happened so far. We had the first down channel, it broke up. We had the first up channel, it broke down. Next down channel, it broke up. So now we've got this up channel. I think we'll do this as a reverse, though. There we go. Although there's more strength in the EMA cloud now than there was this morning, right? Both directions. So that's significant. Hey, look at that. We hit my lower target today. I think I forgot to reset that after the overnight low dropped. Let's see. I think at this point, our lower target's probably going to be... No, we should cheat that up a little bit. That's going to be our lower target now. Our upper target's way up at the previous day high, though. This activity does seem to be petering out. I think we might be grabbing a short here, but we don't have the right contract styled up. Let's switch that. All right. I got 381s in the chamber. Oh, come on. Can I get a better price than this? Did I miss the opportunity? Well, by the laws of today, we're looking for a short again. But of course, past activity does not dictate future activity. It's always good to remember that. Man, that's twice today now, though. I was a little late to the punch. You know, I saw the move after it had already kind of started. It's all right. We'll get the next one. We're gonna do this, guys. If nothing else, I feel good that I'm still seeing the right moves, but just a little too late. Not quick enough. Got to get that brain faster. That being said, this is a good lesson on FOMO. You know, when you see your play, if you missed your entry, FOMO is if you then try to force the entry anyways, right? You end up getting into a not so great position because at that point, you know, you're buying with the direction. So a lot of the volatility is not in your favor when the move starts. So there's the potential for emotions to rise a little bit more. It wasn't your A plus setup. So right there, that's already working against you. B, your P&L is going to be a little bit more at the mercy of the volatility and the movement. And then, of course, C, your risk to reward. Because where you would know you were wrong and the move, you know, wasn't going to end up happening, if you FOMO into position, it's going to be further away than where you'd like it to be. So always something to consider and remember. So look at this. If you had FOMO'd in right now, you wouldn't have been able to see this potential re-entry and or signal to not enter. Let's see what it does up here at this high. All right, it's good risk to reward. We're going to see if we can get in. Got a pretty big wave, up wave here. Actually, we should redraw our channel now and see if we done messed up. Yeah, we may have. Probably should have redrawn that channel after we got that low before I decided to take that entry. So I guess, well, while we're kind of waiting for this to play out, I can explain why that suddenly doesn't become a good idea. This channel that we've now redrawn has much better touching on both the top and the bottom. And while we do seem to be having a shortening of the thrust, it very easily could hit our stop point while still continuing to shorten the thrust. So that's why it is now looking like a bad play. In fact, I should probably look to get out of this. Well, let's see if we get a break here. If it just touches the channel bottom and doesn't go through, well, we can at least defend this for a tiny bit of profit if it doesn't break here. All right. So we're still not going to call this a good play, right? If this ends up working out, that was just luck, right? Because we let me rephrase that. The play was short, but after we redrew the channel, we were no longer in a good spot. So the direction was right, but the timing definitely could have been off. I mean, it still might be off. This may just be reshaping the channel a little bit more. But this looks like it's either going to be the break and crumble or the push back into the channel and something else is going to go on. So I do want to stress that, guys. That was not a well-executed play. The good news is we're going to be able to get out of it with a little bit of profit no matter what. And if it works out, it works out. So now I want to analyze that a little bit. Why did I enter before redrawing the channel? I think there may have been a little bit of an emotional decision in there. The frustration, probably a little bit of frustration at missing our long entry at the bottom. And then, of course, our short entry after we had already been sitting in a long spot. So, two really good plays that we missed probably just made us a little frustrated. So we entered that play a little prematurely. And that's another thing, guys. If you're not doing that already, there's a lot of technical stuff in trading, and the better you get at technical execution, technical analysis, all that stuff, that's great. That's awesome. But there is a psychological aspect to it and a mental game to it as well. And you should be mapping out your emotional triggers, your responses. Oh, there we go. We're out. Oh, wow. That was an aggressive push. That actually knocked us out about 3 cents lower than we were trying. Still took some profit on the play. So, not a big deal. But here's the thing. Had we redrawn the channel, had we waited, we would have gotten a much better price point than we were in at. We could have gotten that as low as 1.6, and we were in at 1.7. So if we were in at 1.6, we'd probably still be in it right now. Although it looks like the breakdown of the channel and the 50 moving average is not going to work out. Channel's still got a decent shape to it. Might have another short opportunity here. Although we are making higher lows right around the 50 moving average, so this is going to be a slightly precarious spot, guys. A short could be great. It could be, but this also might be an accumulation campaign. I mean, we're at the 50 again, right? The 20 and the 50 on our daily have been super lines to play the past few days. Given what we've already had for activity today, if we continue to see this weakened push upward, then it does start to build more and more of an argument of shorting this next breakdown. But again, talking about that play that we were in, we would not have been kicked out of it if we had the entry point that we should have had. So we would still be in the short play at this point, watching this play out. Granted, we got lucky. We were able to, get out of it with a few cents. But poor entry. Poor entry. Got about 7 minutes till period C starts. If we continue to consolidate up here, period C is going to start on a gap between period A and period C. The gap would be from where period B overlaps A, so that would be down at our 61.8 retracement line. Of course, again, that's only if we continue to consolidate up here for the next 7 minutes. Although I guess in theory, we could move down and then back up to this point over the next 7 minutes. As long as we're up here when period C opens, it'll be on a gap. Continuing to see a shortening of the thrust. We are getting some more arguments for the short. Best entry points, obviously, we're up at, where all these highs are. We can wait for this one, though, because if this does end up breaking, we should be able to ride some momentum for a scalp. Yeah, it's not a very strong wave. Another higher low. So this is what we're looking at right here, where I just put that trend line. So even though we keep breaking the channel, you can see that these lows are getting higher, right? So that's telling us that this demand down here is starting to rise with price action, and it's wedging it up against where the resistance is. So we probably don't want to just arbitrarily grab a short unless we actually do get a break. First sign would be the break of this trend line, because that would tell us that the support is no longer rising up. Interesting, we're getting consolidation along the 50 moving average. I think I had said a little bit earlier that if you smushed the profile together, looked like a good concentration point. Sorry about that. Oh, of course, while I was coughing, we did get a break of that trend line. Yeah. Too late now. If we end up finding some support on VWAP, though, that might be a good spot to get long again. Do we have the right contracts dialed up? We will in a second. That C period starting up here soon. 2 minutes. Arg. Charlie Browning over there. What's going on? Talk to me, Goose. Oh, there goes the VWAP. Ah, gotcha. Yeah, the event that I was saying to short ended up happening, and I hesitated to. I understand. Yeah, today's just kind of rife with technical errors for me. Fortunately, they really haven't been bad. I think that is because I'm in tune with my emotions, so we're not making any egregious mistakes. Just missing out on making some money. All right, C period, 15 seconds. Oh, dang it. Missed my long entry. That's a shame. Again, hesitated. We'll see if C period gives us a second chance. But of course, if we do break back to the VWAP, we might not want to get in long at that point. Oh, there you go. That's a pretty clean channel. I do still have my eye on that 50 moving average as our point of control for the end of the day. So C period did not open up on a gap. It's actually looking like it's making a little bit of a poor structure element. Oh, probably should have been paying attention to the ES as well. I'll be right back, guys. Oh, that was a terrible time to step away. Oh my god. Nature called. I didn't have a choice. Looks like C period just gave us a poor low. Oh boy. Also looks like our demand zone has held again for now. We would expect to see a push back up after a poor low, though. People getting knocked out of their positions, short covering, things like that. So now we're going to look for a potential good entry back in short, but we're also going to keep our eye on potential signals that that is an extreme. And as we had said earlier, we're balancing. And I'm going to change this. Oh, looking like that short play we had definitely would have been awesome. If only we had the good entry, we never would have left it. Womp, 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 womp. So just more reason, guys, to make sure you get your entries, and you won't miss out on plays like this. um, Personally, I don't think we'd see a long stop loss covering until we broke the previous day low. Just from a psychological standpoint, that's generally where the algorithms and the bigger firms will put their stops. So considering today's Wednesday, we'd probably be looking more at stop losses below the T+2 low for the big boys. And they've probably made their bets for Friday based off of the CPI reports. Now, when we're thinking intraday, a lot of times our market profile levels are really good for identifying where they could run stops. Um, Generally speaking, with market profile, the points above and below your end markers of the different trading periods are spots where you'll see market makers move price action to run stops. That all said, if you've got the time to type it up, I am curious what your logic and reasoning is for seeing longs cover below the 378.62 line. Here we go. Some resolution for that poor structure. Gonna go tackle that demand zone. That's a triple tap on this support, but the structure is garbage. We've only got one tick on period A below where period C's come to. So that's ugly. That's very ugly. I'm still not looking to just dive into this day short, though. I mean, for all intents and purposes, this still feels like a balanced day for me, with everybody trying to kind of shuffle their positions around before the CPI report. But like I said, I am going to be paying attention to that previous day low, because a breach of that changes everything that we've seen over the last 4 days. So that'll be the first lower low. Now, if we end up touching the 378 level, that is where our max pain is. And if we touch that and move back up, that would correct our poor low. That would address the max pain point. And there's one other thing. Nope, don't remember. Oh, the demand zone. That's right. We have a demand zone there, and that would hold it. The demand zone goes to about our previous day low. Still find it kind of silly how if I have zones or rectangles drawn on previous day charts but extend them through, that they show up as these weird lines on my tick charts. I mean, if I redraw it, it would pop up just fine, but it's still annoying. Okay, so now C period has gone one tick below A period. So still poor structure, just flipping the script. Jeez. And of course, that demand zone right there, it's still holding. So, I mean, despite the fact that it's poor structure, there isn't like a rule that says it has to correct for it. It would really just be like a confidence thing, right? If we saw the 3 ticks down touch our max pain, go a little bit into that demand zone, and then a turnaround. That definitely could draw in folks who have been sitting on the sidelines, right? Because there's a lot of people who would be watching that and saying, "Oh, well, would you look at that? That all looks proper. That's all good." But if we don't get it, again, there's nothing that says it has to fix. And we're playing around with the same support line that we were playing around with this morning. Oh, I just realized we did, after we moved our lower target, we hit it again. I kind of like that as our lower target for today. I think we are going to adjust our upper target, though. I don't think there's any way in heck, at least not for the time frame we're going to be trading in, to hit that upper target. It's a little bit under our halfback and just over today's high. I think that's a reasonable upper target. Although if we were really trying to be realistic, that's where we should have our upper target. Oh, should I have drawn a channel on this now? Because, I mean, we kind of already determined that that was the game today, right? Well, definitely missed the shortening there. Hindsight analysis, of course, we can see that that definitely says, hey, that's not a bad spot to get long. All right, so there's number 3 that we missed because we were doofing around. Let's see how the EMA cloud holds out here. If we get a little bit more pullback, might have a good spot to get long on. But I still don't like that poor structure below us. It just makes me hesitant about entering long, especially right here. Because the risk to reward, I mean, our risk is down, below max pain, right? So it's below that 378. So if we entered here, that's quite a bit of traveling distance. But if we get a push up and through, we could use the crossover event as our entry for long. And then that's good risk to reward for that spot. The only thing I don't like about that is that it would be right at VWAP. I mean, technically, if we're playing balance plays, we don't want to diddle around in the middle. All right, we got about another 10 minutes, guys, before we're going to be shutting the stream down for today. I mean, sometimes I do keep trading after 11 a.m., but I don't want these streams to get longer than that. It's already an hour and a half. So I mean, if you're watching it on 2x speed, because I speak slow-ish, probably can still hear me just fine, and then that would turn an hour and a half stream into like 45 minutes. So that's a little bit more doable. So actually, yeah, that's a little tip for you guys watching this video. If you haven't already, you can speed up the replays, and definitely makes it easier to get through long videos like this, where there's just there's downtime, right? There's moments where there's really nothing going on. We're not in trades. We're waiting for a little bit more information before we drop some analysis. So you're probably not going to miss anything that I say, or at least nothing important. Yep. We do have a nice consolidation zone here. So we'll be waiting to see which way it breaks. My gut says up. All right, it's a deal. Although the unfortunate thing is basically one of us is going to be right, one of us is going to be wrong, and that means one of us is going to be taking the other's money. And guess who wins no matter what? Yep. That's right, ladies and gentlemen. No matter what side of the trade you're on, winner or loser, the only person who's always winning is your broker. Yeah, I'm hoping that that'll continue to pace upwards. I think it'll look similar to what we saw a little bit ago at the top, just the reverse. Put call ratio is pretty neutral, so that's not helping us. ES 15-minute candle bodies. The bodies of the candles have been struggling to get any lower than this point. We definitely have wicks that are lower, but the bodies are all kind of right in the same spot. My still most ideal scenario is to see this drop down 3 ticks below the low and then an abrupt reversal. That is my most ideal long scenario. We are 5 minutes from D period. All right. Ideal spot. Let's go. Oh, come on. Execute me in, you jerk. Really? Oh, come on. Gosh darn it. That is way more expensive than I wanted. Oh, that's gross. This is where I wanted to buy. So let's do this. All right. 10, 20. All right. It's our last position of the day. Our stop is below the previous day low. If we made the right choice, this will be a banger. If we didn't, we're taking a red day. Oh boy. Well, there goes our previous day low. And it looks like I made the wrong choice. Possibly we'll turn around here, and then I might be able to find a spot to get out of this. But now that we've breached the low, that's a good bear signal. Right? Bears are going to be a little bit more excited about playing now. Yeah, it wouldn't surprise me if they run this up for a bit to try and knock out any of the weak shorts before then trying to take it to the limit. Come on, keep going. Keep going. We can get out of this play. Oh, we're like right there. All right. We might make a couple cents on this. Would you look at that? Okay. So, I mean, it's going to suck if this thing just starts ripping up, but I just don't feel that anymore. Although if I had waited a little bit longer, we could have taken some decent profit and not broken even on that. But on that note, guys, we're going to go ahead and shut the stream down for today. Oh, yeah, look at that. Oh, that's a shame. Actually, would have been some decent profit. 15 cents right here. Oh, that's baloney. Rough. Okay. All right. Well, hey, that's the way the cookie crumbles, guys. You know, not going to cry over spilt milk. That's our trading day, and enjoy the rest of your day. If you like the content, please like, subscribe, come hang out in Discord. We have a good time. But yeah, that's it. Adios.